So here we're talking about Caterpillar, okay? So we're going to set the scene by starting with a big US-based capital equipment manufacturer and talk about its business model. But remember, and maybe in this conversation, Rowan and I can bring in some comparisons with some of the other global players out of the East and so on. But Caterpillar, of course, is the company headquartered in Illinois. That's close to Chicago at a small town called Peoria, believe it or not. They've got manufacturing facilities, though, all over the world. Earth-moving equipment. So we're talking about those massive yellow trucks, the ones that have wheels that are larger than 3 people standing on top of each other's heads. They also, of course, though, manufacture diesel engines. So that is engines that are used in gensets, power generation, you know, for the large industrial location where the power grid is not reliable, as well as electric locomotives for trains, even ship engines is another big part of their equipment, as well as heavy mining equipment. They bought a business called Bucyrus some years ago that actually makes what are called longwall coal mining machines, some enormous contraption that you assemble underground in order to mine a coal seam. Can you imagine what kind of equipment is required for that job? Market capitalization, $44.05 billion. Okay, so you can do the maths on how big that is. Not tremendously enormous in the context of the United States, but still big enough to be a Dow Jones Industrial Average constituent. Dividend yield 4.21, price to earnings ratio rather depressed lately, 12.54. I know I've been going on for a long time, but let's look at the share chart, because that tells you that the picture is a little bit glum, to be perfectly honest.
Yeah, and I guess what you were talking about, that sort of cyclicality, you can see it in the share price.
Yeah.
There's periods sort of euphoria and significant expectation, then followed by a decline in demand and very much tempering of those expectations. And I guess we're in a trough now, and that's been the big question, because Caterpillar as a business, I think we'll see some of the other companies are reliant on the demand,
connection
and
between
it's
the
a
two.
bellwether essentially for demand of that type of equipment. So and currently very depressed, and I guess the point has been, you can see it in the valuation of the stock. Where is the bottom in this sort of resource cycle that we're seeing? And I think where there was sort of some optimism that we'd sort of reached a trough and a bottoming out, we're not really seeing that. I think you're seeing increased supply. I think a lot of those large mining houses are continuing to produce, and really they're looking to break the marginal producers.
So you're saying the prices look very depressed. So anyone who was thinking of a new project is probably saying, look, we're going to wait.
And that's really, I think, been some of the recent downgrades has been exactly that. There's been sort of a delay in expectation of commissioning of projects, and really where's the bottom of the demand. So we think it can go lower from here, and hence, I guess, the Caterpillar share price can go lower as well.
Look, we owned Caterpillar for clients in the US for many years, and it was a strong performer and a very good corporate operator. Doug Oberhelman, the CEO, just like very good. They would tighten up manufacturing production, world-class manufacturing production facilities, even though they were in the US. The idea that they were like failing and not competing well with the Asians was not borne out. They delivered the best equipment, you know, for the most demanding client applications. They were very good at saying, okay, we're not going to sell as many of those, so we're going to make more of these, small power units, the marine engine thing. I don't know. I mean, as far as a top quality corporate is concerned, doing well, but somehow just never reflecting really that much in the share price. It follows.
If you look at their numbers, it looks like they are doing all the right things, focusing on efficiency, on cutting costs in this environment, improving the return on equity. But I guess, you can't have a big impact on the demand, the end demand of your products. And maybe, move more into services, the aftermarket, which is less cyclical. So that's
one other question about them is that, they were the world leader from like the 1950s, 40s, 60s and onwards, right? But then the emergence of the Asians, initially people would say, Komatsu and, the Koreans, their quality there is not really up to scratch, but now it is, right? So those guys have gotten better and better and better. So that's another global trend in the equipment manufacturing arena, is that there are more and more sources of high-end, high-quality equipment out of Asia.
Yeah, so I think that's something they'd have to watch. I think they've got a massive sort of, obviously, both brand and established base, which will probably sort of protect them in the short term. And it sounds like they're very efficient, so they're probably countering some of that competition. But yeah, at the sort of margin, it would impact.
And of course, they do manufacture in Asia as well. Okay, good. So unfortunately, as good the company is, probably not hot currently.
Yeah, I mean, I think it's you can express a view on the resource sector through the stock, and the view would be not hot.
Right.